What is up, everyone? So today we're going to be doing a little bit different video. I'm going to be talking about investing today. And you may think, well, investing, how does that deal with personal development? Well, it goes correlated with personal development. As far as when you invest money to improve your personal development, you are investing in yourself. When you invest money into a stock market or into a business or anything like that, you are investing money into something that's going to give you more money. So investing goes hand in hand and is correlated with personal development. Why, might you ask? Well, if you think about, when you plant a tree, it takes some time to grow. Just like when you plant an investment, it takes some time to grow. You don't just hop into personal development and go, hey, one day later, I am cured. I am personally developed into this newer being and I am so much better for it. No, it takes time. And so one of my favorite quotes is by Warren Buffett talking about that, where it says, someone's sitting in the shade today because someone planted a tree a long time ago. And it goes to say that doesn't just apply for money. That also applies in reading and meditating and manifesting and working on your personal development. So we're going to take time today to look into investing into money assets or assets that produce money. Now, I do have to put a disclaimer that I am not a financial advisor. I am not somebody who you should take this advice and run with it. And I'm not going to say you're going to make millions of dollars, but what we're going to do is we're going to look at some charts. We're going to look at some things to better get a better understanding of what's going on in the world and how you can play along in the game of making money and wealth. So I have spent the last 4 years investing my time and my energy into learning about the stock market, about cryptocurrencies, about all kinds of different things, because I believe that if you want to get ahead in life, you have to learn how to play certain games, because that's what these are. They literally are a game, in my opinion, that you have to, it's like playing Monopoly, but on a larger scale. So the first chart we're going to look at is the chart of the 2008 crash. And the reason why we're looking at this chart is because it's going to get into play later what is happening present day. So if you look at the chart here, you'll notice from the time of 2003, because that's how far back I wanted to, kind of get this one. 2003 to 2007, we had what you would call a bull market, where everything is trending upward. People are making money. The Dow Jones is going up. The NASDAQ, everything is just going up. There is no bad things happening. Life is hunky-dory in the life of the stock market. Now, you'll notice around 2007, middle of it, 2008, we see this steep drop-off all the way until almost 2009. And this was the housing market crash. This was the subprime mortgage rates and everything for houses. If you could sign your name, you were approved for a house. It didn't matter how much money you made, because they wanted to just get people on these very high subprime interest rates. Well, it crashed, it backfired, and this is what happened. The economy tanked. Now, if you notice, it went from what was almost a high of 1,600 down to almost 700. That was over a 50% drop, okay? That was a huge drop, but as it bottomed, you start to see it come back up. Yeah, we had some dips here and there, but as you can see, it recovered and it continued upward into the present day where we are now. If you look, the all-time high was 1,600. So let's go over and look at current day, which you can see the all-time high was almost 30,000. So we went up quite a bit in that 11-year bull run. Now, you'll see I drew a trend line here. We'll talk about that in a second. But as you notice, we had our dips, we had our ups and downs and everything, and we had a small little crash back here in 2019. Things happen. I think that was around the time with the trade talks or the tariffs with China and all that. And a lot of times you'll see that people sell the news, they buy the news. There's fear, there's greed. Emotions play into the stock market. And I'll get into that a little bit later. But as you can see, we stayed consistent with a trend line. That trend line is basically the upward trend of how the stock market is coming back down, testing it, going back up. It's a line of support. So as long as we stay above that, we continue to have a pretty good market. Well, then we had the pandemic and it crashed hard. We went from 30,000 all the way back down to 19,000. Does this look familiar? That last chart I showed you, we crashed over 50%. If you look here, we didn't really hit 50%. We hit more in the 40s, but it was still a huge crash. But if you notice, just like on the other one, we had this big V-shaped recovery and we're coming back up. Yeah, it came back below it again and then kept going up, but we're seeing support. And so what I'm trying to show you is we have these resets every so often. They're natural, they're healthy. This is how the stock markets keep going up. This is how everything continues to flow upward. It is scary to see that big of a drop. I'm not gonna lie, emotions come in. But if you are well educated and you understand what is actually happening in the market, this is what is called a reset and transference of wealth. What happens is all the smart money pulls out up here. This is the investors. These are the hedge fund managers. These are the Warren Buffetts, the Goldman Sachs, the JP Morgan investors, all this up here. They sell this news because they know once they start selling, then these margin traders have to start selling off because their margins are now below the percentage of where they need to keep. So it triggers an auto sell and it keeps going and going and going and going. The investors that started selling here know about this. So what they do is they start triggering those automatic sells on the margin sales. And then you get this little bottom here. Well, most investors know, hey, bottomed out, let's buy back in. We've pulled our profits, we go back in. Now, the reason why I want to show you this next chart is because this directly correlates with the stock market, but it is called an ETF. This is the Vanguard, one of the Vanguard ETFs. And if you look, and I'll put these side by side, they are identical as far as the chart pattern. The reason being is this is the world trade market for Vanguard, and it's directly correlated with the markets of the world. So as the markets of the world crashed, it crashed. As they go up, it goes up. These things are all tied together, including Bitcoin. Now, I know some of you may not have the fondest, things with Bitcoin, but that's not the point. The point here is to show you. Back here, you can see in this little area here, back March of 2020, Bitcoin had a huge crash. Now, it hit its, trend line. As we can see here, I drew a trend line here. Bitcoin is still in an upward trend, even going through a huge bear market cycle. The reason being is we have the halvening and a couple other things, but also Bitcoin is supposedly, and I say supposedly because I'm not going to take sides, but supposedly a store of value just like gold is. Gold has also, and I didn't put the chart up here, but gold has also done the same exact thing as these ones. You can look it up for yourself. Actually, I may even just go download one and put it in here and show you, but gold is also hitting its all-time highs again of 1900. Why is this? Because the investors are putting their money back in. They see everyone sold off in fear. CNN, MSNBC, all of the news networks are telling you it's a scary time. Unemployment's at a all-time high. The market is full of uncertainty. Do not put your money in. Why are they telling you this? Because this is where the smart money reads between the lines. If you look at the correlation between unemployment and the stock market, they have no relation to being the same. As far as when the stock market's down, unemployment's down. Actually, it's the exact opposite. When the stock market's down, unemployment's at its highest. Wait, did I say that right? When the market's down, unemployment is at its lowest. Sorry, I did that backwards. It's at its lowest, meaning the stock market comes down, unemployment rates are relatively low. As we start to see the stock market come back up, unemployment rates are at their highest when it's at its bottom. So it's kind of an inverse correlation. if you're getting what I'm trying to say. I'll show you on a chart here. But the problem is we get this fear because of what the news tells us. Now, I'm going to be going over another video later about the media and why you should stay away from it. But again, not all media is bad. We're not going to get into that rabbit hole. But the point is you have to read between the lines when it comes to this game, because the investors that are out there on CNN, they're on MSNBC, they're on Fox, all of these analysts, these experts, they will tell you, oh, it's a bad time to buy. Look how hard the stock market's getting hit. It's down 10% today, yada, yada, yada. Fear and greed drive the markets. Pay attention, people, because you'll notice as the market recovers in the next year or two, you will see people get greedy again. You will see that the market will rebound. You will see that people will start to make money again. But all the people who bought in at the bottom, they're the ones that are going to make the most money. They're the ones that poured in millions of dollars to buy stocks at a cheaper price. One stock, for instance. So for instance, Boeing. Boeing's all-time high back in March of 2019 was $440. If you look at the March 20 crash, it was $95. Okay? So let's take into account that this stock was $440. If you go in and you sold your stocks, so let's say you stole them. No, that's what they're doing. Let's say you stole. Why do I keep saying that? Because I want to. Let's say you sold, at 400. You didn't sell at the top. You just sell at 400, and you had 10,000 shares. That's $4 million you cashed out, right, with your 10,000 shares. Now, these hedge fund managers, they get a lot more. Point of the being, let's just make it an even number of 4 million, okay? Then you turn around and invest that 4 million at $95 a stock. Let's say you got in at 100, okay? Just to make it easy. Got in at 100. You now took that 10,000 shares and turned it into 40,000 shares. You have now 4 times the amount you had before. Then, like they always do, not always, not every stock does this, but, blue chip stocks, the stocks that are very certain that have been in for a long time, like Boeing, like other ones, like hotels, like you can look at Choice Hotels, you can look at Marriott, you can look at Carnival Cruise, all of these different companies that got hit hard by the pandemic, they're going to go back up because eventually we're going to get back to normal. We're going to have regulations for travel and things like that, and it's going to go back up. If it hits a new all-time high, let's just say $500, right, and you have 40,000 shares, you've now turned that $4 million into $20 million. Do you see where this is a transference of wealth? You took $4 million and changed it into $20 million. Because more than likely, these people, let's say they even bought in the last dip of December 21st of 2018. They bought their 10,000 shares, at 304. They put 3 million in. They've turned 3 million into 20 million. Or you could even say they went as far back in and bought and held from February 12th, which was $100, 108 times 10,000. They only put in $1 million to change it to 20 million. Are you seeing the transference of wealth power here? It happens. A lot of these hedge funds, they bet and they actually borrow some of this money. It's not completely all theirs. It's called options trading, margin trading, things like that, to where they can borrow a huge amount. And yes, some of these, if you read the articles, they don't really make a ton of money if they're not doing it right. There's only a few that are really good at it, like Warren Buffett and a couple others. But they do lose money from time to time because they bet wrong, and it happens. You can't predict the pandemic coming unless you're one of the people who are into all of that. But anyways, if you're trading and you don't have the information about that, and that happens, you can lose a ton of money. I mean, if you bought at 340 on Boeing, and it came all the way down to $95 a share, I mean, let's just take into account, you lost $245 per share. At 10,000 shares, you would have lost $2.5 million. So yes, you can lose a lot of money while making a lot of money too. So it's all about paying attention to the game. And when the best advice I could give you as far as when it comes to the media, don't pay attention to them. When they're saying to sell, you should probably be buying. When they say to buy, you should probably be selling. And that's not financial advice. That's just what I do. That's my own personal bias of looking at the media news, because honestly, I've correlated it with, paying attention to the stock market and seeing how it works, and it works almost to the T every time like that. When they're telling you not to buy because unemployment's at its highest and the economy looks terrible, the economy and GDP and all that has nothing to do with the stock market. Nothing. It's all a lie. But hey, take it as you want. That's what I'm telling you. And again, not financial advice, just pointing out some things to better help you when it comes to investments. So I hope this gave you guys a little bit of insight into markets and how I see them working and how I'm working on my investments in them to gain some leverage and some financial, stability in the long term, because this is not as complicated as they make it out to be. And I feel like I want to share this to help as many people as possible. If you disagree with me, please let me know in the comments below. I'd love to have a conversation with you guys about this and see what some of your points of views are on this, and see how you guys feel about this whole game of the stock market. I started at an early age of 10 years old paying attention, and then I kind of lost interest in it, and then I came back to it. But there's a lot of things I wish I would have done when I was younger, like ask my parents for $1,000 to invest, because I'd probably be a millionaire and not have to even be doing these videos right now. Just kidding. I'd probably still do them just for fun. And I still do them for fun. But anyways, that's what I got for you guys today. I hope you guys liked it. I hope you guys enjoyed it. And maybe it gave you a little bit of insight into this crazy world we're living in right now. And hopefully this will give you a little bit of a leg up coming in the next couple of years here. So be on the lookout for more videos similar to this, but not exactly like this. But I may throw in, I've done videos before with crypto and a couple other things, but I think I might spread it around a little bit more. Another one I've been watching is the US dollar, because it is at an all-time low for the last year, I think, or something like that. But anyways, hope you guys enjoyed it. Hope you guys have a wonderful day, and I'll see you guys next video.